this is going to be one for a very, very hated commodity. So, natural gas, well, let's just take a look at UNG. So, UNG looks like this. It's peaked at about 500 in 2008, and now it's at 22.26 split adjusted. So, it looks like it's turning around. I don't think it's going to get all the way back to 500, but in the meantime, there's some pretty positive developments that we're seeing in it. So, the actual ETF, UNG, went up about 4.51%, and interesting that I just saw a report that said this past winter, 2013, was warmer than average, but, we listen to the chart, we listen to the market, see that kind of thing. So, what do we have, pretty much? In the last few years, I've been seeing that, and you can go back to a couple of my other videos, and I've been saying that natural gas really looks like it's had a bottom. And why did I say that? Pretty much because if you go back to like a 5-year chart, this is what it looks like. Price is going down, price is going down, price is going down, and it looks like you see that price keeps going down and volume keeps going down too, and then something happened around right here that started attracting more interest, and suddenly we see that price kept going down, but volume started spiking, and we had this first low right here. We had a test of this low, and all this time that the price, the volume keeps expanding, so we kept having more and more and more and more interest. And given that, if we take a look at this, price really did not move that much. Let's see, it got from 15 to, at the top, let's say around 22. Price didn't move that much compared to if you go back here, where in about, let's see, June to December, it went down about 50%, if not more. It looks like there was accumulation. There was very little price movement and very high volumes, and that's normally what happens. You have accumulation, and that normally happens at the tops in equity markets and the bottoms of commodity markets. So I said now's a good time to start buying. So we are back up here getting close to this upper boundary around, it looks like about $23. So we're at $22.46 right now, and in the short term we've had a very nice spike in the actual price. Now let me just bear with me while I see if we have a bracket retracement on this. So I think we're going to have one. Yep, looks just about right. So if we wanted to do a retracement bracket on this, you would say, all right, so we had our first, then we had our next one up, which took us to a 161.8, and then we had this retracement, and if you just want to do a proportionality target on natural gas, you would take us to about 23.93. So still gives you about $1 of room. Now, of course, you're seeing that this went up 97 cents, so it's volatile as heck. It's very volatile. So the pattern that I'm looking at right now from traditional analysis standpoint is there is a flag formation. So the price was going down, and then we broke this trend line here. We pretty much went vertically up. So we went to about this level before consolidating, and then we had the sideways movement right here, which it broke out of, and now we're expecting it to go up again until we get to our next point of resistance, which, if it can manage to get through this 23 area, the next point of resistance looks like it's going to be, wow, we're going to have to go back for this. Next point of resistance looks like it's going to be about probably close to about $25 or $26. So we're saying that what if a long-term thing happens in natural gas that's going to make prices go up more? Alright, so it still looks attractive to buy. You might have a gap down the next day just from a simple oversold perspective, but you can always say, alright, if it goes down, I'll take a half position, and then I'll take the other half position once it breaks out again. Or you could take a half position now, and in the event that it just runs away and keeps going up, at least you have a half position. Or you could say, I'll take a half position, and then when it goes down, I'll take another half position. So the idea is, especially since natural gas is extremely volatile, don't take a full position all at once. And the price target will be, from traditional analysis, I was in the middle of that. There we go, just about $26. So target is 26. And make sure to pyramid into the trade in two parts. If we actually look at the RSI, yeah, it looks like it's declining, but it turned back up again, so we're still not overbought. So you could still get into the trade. It's still going to be risky. Now, if you really want to turn this into a trader's trade, let's not do UNG. Let's do BOIL, B-O-I-L. This ETF does 2 times the movement of natural gas. So in UNG, we said the target was 26. So 26 is about, let's see, 23, 26, that's about, let's just say 12, let's say 15% above where we are now. So if you do BOIL and you want to do the trade now, unless it runs all the way and it runs, instead of 15% up, it runs 30% up, which takes us to, instead, about, let's see, 30% of 50 or 52, 30% of 50, that gives us about 17 bucks on top of us. So it takes us all the way up to about 70. So there's the potential to make a good amount of money on this, and that's what I suggest you do. Assess your own risk tolerance. If you like the risk, go ahead, buy BOIL. See how it's going to work out for you. And I want to show one other thing. These breakouts are on very high volume, which I like. I like a lot because that means there's a lot of enthusiasm going into it. So main key, get into this trade into 2 parts, and if price looks like it's going to reverse, like if you see internal weakness or if you see volume slowing down, or see volume picking up and then price not moving, that normally means that there's more sellers. So don't hesitate to get out and use options to hedge yourself. So natural gas actually looks pretty good. All right, so take a look at it, maybe trade it, and best of luck.